Max, it's our time of the week where we shift our attention over to the markets. And joining the broadcast this week was Barchart Senior Analyst Darin Newsom. We had the chance to visit with him on Thursday morning. Joining us this week to offer his thoughts when it comes to the markets is Darin Newsom with Barchart. Darin, it's good to see you. Thanks for coming back to Market Journal.
Yeah, appreciate you having me on again, Bryce.
Absolutely. Let's start with the corn market. Ethanol demand has been strong, but we're also seeing large fund positions when it comes to corn. Is this enough to keep prices supported, do you think, or do you see some downside risk ahead for the corn market?
There's always some downside risk when we start, playing trade games. So, and most recently we've seen, the announcements of tariffs on steel and aluminum, with Mexico being the second largest exporter of steel into the United States and the third largest of aluminum into the United States. So, we know Mexico right now, the officials in Mexico are watching Brazil's crop very closely, because right now the planting of the safrinha crop, the second crop in Brazil, has been delayed because of rains and then slowing down the soybean harvest. So, but I have a feeling that as soon as the Mexican buyers feel more comfortable with Brazil's production of that second crop, that some of these sales that we've been seeing here from the United States will start to dry up. And so I think that's a real risk here because, as you mentioned, funds have built a large net long futures position. And yes, we still see, a bullish May, July futures spread in the corn market, again, for all the reasons basically coming out of Brazil. But these could certainly change. And so, it's certainly going to be something that we have to watch here over the coming weeks.
Okay, I think it was the start of this week. We did see a Mexican buy of U.S. corn. Did that surprise you, considering the tension that is building when it comes to trade?
No, right now what it looks like is that Mexico continues to kind of build up its supplies, knowing that at some point it's probably going to shut off its purchases from the United States. And so, we are seeing them build kind of a bit of a book here, and shipping as much as they can before everything hits the fan. And so, will this be a number of days, a number of weeks, a month or so? We'll see. But we can see that these purchases and these shipments that continue to happen are just kind of a buildup for the expected problems not that far down the road.
Okay, let's go from corn to soybeans now. Talk about Brazil. You hinted at it. Their soybean crop coming in fast. How much do you think that's going to be pressuring U.S. prices? And is there any hope for a rebound when it comes to soybean exports?
No, I don't think so. And in fact, if we look at the latest weekly export sales and shipments tables, we see a steady decline in demand for U.S. soybeans. And some of this is seasonal as we get into, the latter part of winter and more supplies from Brazil become available. Certainly, we know that the U.S. as a secondary player has become a secondary player, was made a secondary player in the not too distant past. And that hasn't changed. And so, the world's largest buyer, China, is still sitting there waiting for the bulk of Brazil's crop to come in and make it to port. And so that's where the interest is going to be. And we can certainly see that in the way the market's playing out, not just the futures market, but future spreads. I mentioned the May, July spread in corn, it was still bullish. But as we look at the soybean spreads, both the March, May and the May, July are creeping towards bearish levels of carry, as we come to the end of this week and we start looking ahead to the end of February. So again, nothing overly surprising about any of this. We've continued to take ourselves out of the game, and I don't see it changing anytime soon.
Darin, on last week's episode, we let people know that you were going to be our guest, so a few questions did roll in. One, when it comes to wheat, I'll just read this. Jeff wrote in. He said, winter kill concerns seem to be popping up again in the plains. Your thoughts, do you think that could actually impact wheat production, or is it once again just market noise?
It's market noise. It's winter wheat for a reason. First, wheat is a cockroach. It's a cockroach of the grain world. It takes a lot to kill it. And it's winter wheat. It's supposed to face winter conditions. It hasn't been warm enough for the crop to come out of dormancy yet. In some areas, yeah, there isn't a lot of snow cover or things like this, but we've seen this before. But if we want to know the market's opinion, all we have to do is look out, particularly in the hard red winter market, is look out at the July, September, and September, December future spreads. The July, September spread was covering 76% calculated full commercial carry. The bearish threshold is theoretically it's 67%, so it's incredibly bearish. And the September, December was covering 68, 69%. So I mean, the market's saying it's not worried about it, and realistically, neither should we. I mean, we're just at that point of the year where people have to make up things about wheat to be able to talk about, or there's simply nothing to visit about.
Yeah, appreciate your thoughts on that topic. Let's quickly get a question in here about the cattle markets. Of course, they've been under pressure here over the last couple of weeks. Cash trade slipping, box beef prices also following. Do you think that's just seasonal, because that does seem to happen this time of the year, or is this is this looking like a bigger shift when it comes to the cattle market?
We have to be careful with cattle here. For many weeks now, the months now, the market has looked overbought. It looked like it's way top heavy, and so all it was going to take was to see kind of the cracks start to form in the cash market. And that certainly seems to be the case. So now we'll see if that can continue. We've already, we saw lower cash prices again this week. We've seen boxed beef prices coming down. The feeder cattle cash market has been all over the place. And all of this puts the large futures position, net long futures position in both live cattle and feeder cattle at risk, because those traders aren't going to want to sit there and continue to hold if the cash markets are starting to break down. So while we don't have any clear indication that this is going to be a longer term problem, we need to keep a close eye on these markets because it could certainly develop into one.
Okay, finally, bonus question for those going to be watching this as part of the online version of our broadcast. When it comes to planting decisions 2025, the soybean to corn ratio seems to be pushing hard for more corn acres. Do you expect that to change before planting season or stay the same?
I would look for that to stay the same. I mean, it's been this way. We've been tracking this since the first week of September, looking at the 25 spread, 2025 spread, and December corn is held firm against November soybeans the entire way. So whether or not the spread is saying it wants more corn acres or it just wants less soybean acres, as some have pointed out to me, either way, the end result looks like it's going to be the same. That when the planters start to roll here across the U.S., that we're going to see more area going to corn.